Hi there, business owner. Are you looking to improve your business knowledge? Do you want to see behind the scenes of successful businesses? And more importantly, are you looking to build a better business in just 15 minutes each week? If so, you're in the right place. Welcome to the 3Bs podcast. Hello and welcome back to another episode of the 3Bs podcast, your go-to 15 minutes each week to help you build a better business. As always, hi, I'm your host Stephanie, and if you're new here, I am a bookkeeper and accountant with over a decade of experience, and I help business owners every day build better businesses. Now, finance is my absolute sweet spot, but I love all things business, and we also do business development services in the practice that I run, ABCS UK. So we are in January. By the time this goes out, it is going to be one day until the self-assessment tax deadline. If you have not yet completed your 23-24 self-assessment, now is the time to do it. So actually just turn off this podcast and come back to it at the end because you need to get that done right now. I wanted to carry on with the conversation I've been having over the last few weeks and the last few episodes, and that is self-assessment. I wanted to carry on this sort of self-assessment series because January is very busy for bookkeepers and accountants, and if you're a self-assessment submitter or a business owner that you do it yourself, then it's a very busy time and time slips away really quickly, and before you know it, here we are, 30th of January, and one day until the deadline. So 3 episodes ago, we talked about self-assessment who, which is all the different types of people that needed to submit a self-assessment for the 23-24 tax season, which is the one that we're doing now that ends tomorrow on the 31st of January 2025. And then we talked about self-assessment in, and that was all the different types of income that should be included on your self-assessment. And we also talked about why it's important for you to include all the different types of income on your self-assessment, even if you're then going to offset the whole amount with an allowance like the trade allowance or things like that. It's still important to include everything. And then last week we talked about self-assessment out, which to no surprise was the most popular of the 3, and that's all the different expenses that you can claim on your self-assessment to reduce your tax liability. Include those allowances and the little things that we often see are missed by our clients, and we have to go back and ask for, and all the allowances to only make them pay the tax that they need to pay. Which brings us to today, which is the last one of self-assessment season, and that is payments on account, because payments on account can be a really confusing thing for a lot of business owners. So I wanted to break it down easily in 15 minutes. It's probably going to be a little bit less than that, to be honest, today, but I wanted to explain payments on account and the little known fact that you can actually reduce your payments on account in some circumstances. So off we go. Payments on account. So these are the things that the HMRC are going to ask you to pay on top of your tax bill as a payment towards future tax years. Now, it catches out so many business owners and so many people when they first hit that threshold and have asked to pay a payment on account. So we're currently in, or very, very near the end of the 23-24 tax season. So for all the income and expenses, the profit that you are left with from the 6th of April 2023 to the 5th of April 2024 needs to be paid by the 31st of January 2025. Not only that, needs to be received by the HMRC by midnight tomorrow on the 31st of January 2025. So not only do you need to submit that self-assessment, you do need to pay any tax that needs to be paid by that date too. Now, what often happens is when your tax bill due is over £1,000, the HMRC will ask you to pay a payment on account in January and another one in July towards future years. Now, if you're budgeting for a £1,500 tax bill and you've been saving that money away, and then all of a sudden the HMRC want you to pay that £1,500 and then more on top, it can cause a lot of stress. So let me help you understand how payments on account work. Because yes, you have to pay it now, but it is to go towards a future tax year. If you have a tax bill of £1,500 for the 23-24 tax year, that must be paid by the 31st of January to the HMRC. Then the HMRC are also going to ask you for a payment on account, which is usually 50% of your entire tax bill that's also due in the January. So for this example, your £1,500 plus another £750, totaling £2,250 to be due on the 31st of January 2025. Now, that £750 is actually to go towards your 24-25 tax bill. So there's already some money sitting on your account so that you are, in effect, saving towards your tax bill next year. Based on the premise that if you're looking to build a better business, you'll have more tax to pay next year. So actually, by making you put some of it away now, it helps your cash flow when you have to pay your tax return next year. And it means the HMRC are not going to have to chase you for non-payment. On top of that £750 that you have paid in January, they will then ask you to make a second payment on account by the 31st of July 2025 to count again towards this 24-25 tax return that will be due by the 31st of January 2026. So by the time you get round to doing your 24-25 tax return, which will be due by the 31st of January 2026, you'll have already paid £1,500 towards your tax bill. Now, if you've had a better year and your tax bill's higher, they will ask you in January to pay the remainder of your 24-25 tax bill, so whatever it is over that £1,500 that you have already sent to them, plus a payment on account of half of your total tax bill, again, for future years. It catches out all business owners on that first time where you've got to pay a bit and a half rather than just your tax due for that tax year. Now, if you have a business that have been asked to make payment on accounts year after year after year, or it's your first time because of an anomaly, maybe you've had a one-off really big contract this year, and you know that next year you're actually not going to have to pay as much tax, you can request to have your payments on account reduced. Now, you need to be careful with this, because if they find out that you're doing it and your tax bill actually ends up being a lot more, you can be charged extra interest for not making those payments on account in the January and the July. But if you are genuinely concerned about your payment on account, knowing full well that one of these 5 scenarios counts for you, you can request through your HMRC self-assessment portal, where you go in to actually submit your self-assessment if you do it yourself, or your accountant if you have one, or bookkeeper can do it for you. They can go in and specify how much you want your payment on account to be if one of these 5 reasons are yours. So your business profits are down, or your business has ceased. If you know that you are closing the business, or you know your profits are definitely going to be down, you can ask for those payments on accounts to be reduced. If you have other income that has gone down, so if you maybe have an employed role and a business, and your employed role income has gone down, you can ask for your payments on account to be reduced, because when it's all added together to your self-assessment, your tax due is definitely going to be less than what it was the previous year. Tax allowances and reliefs have gone up. So actually, if the employment allowance increase to £10,500, which is going to be in effect from April 2025, will affect your tax due, then you can ask for your payments on account to be reduced. That's another valid reason. And tax deducted at source is more than the previous year. So again, if you have more than one source of income, if your employed role is taking more tax, or your tax deducted at source through your pension has increased, then you can also ask for that payment on account to be reduced. If any of those reasons don't fit your current circumstances, but you still want your payments on account to be reduced, you can call or contact the HMRC and ask them to do that. So that's the 5th reason. If nothing else fits, you can contact the HMRC or ask your bookkeeper or accountant or registered agent to do that for you, and that can help. That circumstance can also fit if none of the others do, but you still wish to claim a payment on account. If you ask for your January payment on account to be reduced, that will also reduce your July payment on account. So if your payment on account was £1,000 and you ask for it to be reduced to £750, it would be £750 in January and £750 in July, rather than £1,000 in both. So you would have £1,500 saved instead of £2,000 against your 24-25 tax return. Like I said, this is a shorter episode this week because I wanted to explain how you can reduce your payments on account and explain payments on account in a more easy to understand way. So I hope that's been really helpful for you, as has the whole self-assessment series. I wish you luck if you're a bookkeeper or accountant still in the trenches of self-assessment tax returns. If you're a business owner that completes it yourself, you need to do it now. Please don't delay. Go and do it. Drop me a message and let me know you've done it. Find me on social media. And if you do have a spare 30 seconds, if you could like, rate, or review this podcast, wherever you're listening to it, or if you're watching us on YouTube, if you can subscribe there too, it really helps me to build a better business and helps me to reach more business owners and help them build a better business too. I've been your host, Stephanie. I will see you next week when we are over tax season and I have something really special to share with you. See you then. Bye.
And that brings us to the end of another episode of the 3Bs podcast. Thank you so much for listening. Please connect with us on social media. Like, rate and review wherever you are listening to this podcast so that I can help more business owners build a better business. See you next week.